Hello traders, Nick Shaheen here looking at the market, 227. Wow, what a day. Oh my goodness. Okay, so today was a great trading day. Today was not a great stock day because the market fell off a cliff just when it showed some, even the small caps went green a little bit in the middle of the day on a nice rebound. So clearly, the tizzy, the market still has the sniffles, to say the least. Probably pneumonia at this point. Okay, this is the S&P daily chart, about a year's worth of data, and it shows how quickly this falls. Now, CNBC is reporting this is the fastest correction in history. I think they mean from all-time highs to into a 10% correction. But regardless, it was pretty dang fast. How about that? So what now? There are some things to talk about. First, the virus. It's the trigger that caused the tizzy. We've been saying, people have been saying, it's been logical to expect. All this is true, that markets went too high, too fast. But that alone was not a reason to short. If you didn't like it, you just should have just stayed out. But those who shorted made out well. So what to do now? Is it time to panic and all of that? So this is the point of this video, is trying to make sense of what the hell? What now? What do I do? Who do I listen to? What headline? My friends are in the chat room. I feel the questions are coming panicky. Oh my God, did you hear there was a case there and there was a case there? Like, okay, well, go into a chat room that covers the virus and panic. In the charts, you should be able to, or in the stock market, you should be able to clear the junk out. All the stuff is noise, and I'll tell you why. Here's my thought. Before we continue on, I mentioned the chat room. Down below, in the description, there's a link to it. Give it a go. We did great today in the chat room. Everybody's like, I can't believe it. What a day. Just because we traded the action, not because we were a genius at expecting anything. We monitored the lines, and once the lines got crossed, you could take a trade this way and that way. And halfway through the day, people were saying, okay, what's next? I was like, did you do well today? Yes. Then go walk the dog. You don't need to do anything next. So back to, what do I do now? From a fundamental basis, from a headline basis, is it time to panic? Nothing here is a recommendation to trade. I'm just sharing my thoughts on how I'm approaching this mess. It is a mess. So we have three things. We have the headlines, we have the fundamentals, and we have the charts. At least that's to me. And I'm going to throw out two, and I'll tell you why. The headlines have been crazy. We don't know what's real. We don't know what's double reported. The reports that come out of Asia are weird. We report 240 cases today. Is that today or up to today, or today you're reporting on something from before? And 14 dead or whatever. So it's pretty confusing. Needless to say, the bottom line is we have a severe cold going around, and we don't know how fast, how it mutates. We don't know the stats on it, so it's freaking us out. So unless the governments all over the world, not just the U.S., they know something we don't, they're overreacting and they're causing a recession. Whether there is a virus that's killing everybody or not, the business is hit because they shut down the whole world. They basically shut down the whole world. First China, and now everybody else is shutting down because of a cold. The people that are sick, most of them are getting out of it. So I'm not an expert, but to me, it's an overreaction unless they know something they're not telling us. First, they come on TV and they say, oh, no, we only have 15 cases, nothing to worry about. And then today, they come out and say, we have special money set aside for to make or buy masks. What? The two headlines don't compute. If it's nothing and it's under control, what the hell is the urgency that you haven't used since the Korean War or something to buy or make masks? Complete confusion. It just adds to the what is going on. We don't know, so sell everything. All right, so we don't know what the headlines are, so I'm just going to ignore all of them. Second, the fundamentals. So up here, everybody's screaming, too expensive, too expensive. A lot of people are saying, no, it's okay. So the fundamentals were maybe expensive, maybe okay, we don't know. Down here, they're definitely not worse than up here. They're better. If they were okay here, they were a lot better here. They're great here. If they were too expensive here, they're less expensive here. So in either way, it's the fundamentals improved. But I'm going to throw them out. I'm going to say, forget the fundamentals. They were questionable up here. They're questionable down here. It doesn't matter. Throw them out. We know it's not like 1999 where, you know, Apple is going to fall off a cliff, for example. The first 5-6 companies in the NASDAQ are more than half of the NASDAQ as far as an index. So there is a mathematical bottom just from that. So fundamentals out, headlines out, charts. That's what's left. So I'm looking at the S&P for context. So we had the correction they were talking about. It was 12.5% or something, 12, but after hours it's still going down. So let's call it 12%, 13% in like 7 ticks. That's pretty fast. So what now is their support or whatever? So looking at the S&P, yeah, just there is support, and let me explain it. It doesn't mean it's a hard line in the sand. It means that, so you see these red bars, that's volume. Okay, so volume is big and increasing. So this is a legit test. It's not a frothy one and done. It's increasing, and tomorrow's Friday, and it's going to be more selling in my opinion. I expected the dip today. In my note in the morning, I said on pops, I book profits if I had overnight longs, and I fixed trades that were broken. And because we might want to close the day weak, because people might want to jumpstart Friday, which should close weak, heading into a headline of weekends. I mean weekend headlines. So it might be even worse tomorrow. Keep that in mind. As you know, I'm going to be talking some bullish stuff, but with less bearish stuff going through. But keep in mind that tomorrow, Friday, might be even worse. Okay, so where does the chart bring in some relief based on what I'm looking at? Okay, so these bars tell me when the volume happened. This test here was on, you know, a nice collection of, but nowhere near the volume up here, right? So these bars on the left, the yellow and the blue, are the same volume bars, only placed in where they happened on the price bar. So it tells me that this orange line right here is where most of the buying and selling, the mathematical most of the buying and selling happened in the last year. So if you look at all the action last year, most of it happened right here at 288. That's the mathematical value. That's this peak. You can see there's a peak just below it, and the whole range is beefy. That's if you include the most, the second most, the third most, the fourth, and the fifth. You know, the fourth, and so there's a cluster of support. Huge volume happened here. Huge volumes happened in the last year. Okay, so likely most of it was in this chunk right here. Okay, so that's when all the action happened. So that's when they say consolidated level on the daily chart. Okay, consolidated level. It means they spent time buying and selling, fighting over it, buy, sell, buy, sell, buy, sell, and suddenly the buyers overwhelmed the sellers. This came too quickly because there's not a lot of volume in it relative to this bulk down here. So this level has been consolidated. So on the way down, logic dictates that whoever fought over it, they're going to fight over it again. So the person that bought here made a killing. They say, you know what, last time it got here, I bought and I made a killing. They're probably going to buy again. Those were short, they're probably going to start booking. So this is where if I'm long something and I haven't bailed on it and it's an investment, I wouldn't bail on it into this zone. If the zone is broken, then a second leg is coming. But I give it the benefit of the doubt. Mind you, it was mind-blowing, the action that happened on Thursday. Friday is probably going to be also mind-blowing. So it takes a lot of intestinal fortitude. So make sure you know where your levels are, what your parameters are. When you take a trade, when I take a trade, I say, you know what, I'm going to take a 10%, 20% pain, and then I'm out. I'm wrong, I'm out. If it's an investment, I don't even look at it. I'll see if I want to add to it, but that's a different question. So I mentioned that a chunk make up the mass, right? So what if I go to that chunk? So we know Apple took a beating. So let's look at Apple first. The other thing that brings out support usually on a chart is a level, a pivot level. So if you see here on somewhere around 270, 265, 270, it was a pivot for Apple. They hit a wall, they fought over it, and they said, you know what, it's going to the moon, let's buy it, it's going to $1 million, and everybody loved it up here. Well, now it gave it all back, right? I think it was down 6 or 7% in one day today. So pretty punishing. It's 16% off the highs, maybe a little bit more. Mind you, the highs came fast. If you want to give them credit, they're back to this point. So gone. Ignore it. If this was an extreme, down here is an extreme, somewhere in the middle lies the truth, right? So this was a change of level. They hit a wall, they consolidated a little bit, and then they decided to run. They're back to that same level. Usually these pivot points are support. This is okay support. It's the value area. It's the top of the value area, also a volume profile term, which also should provide some support. But again, it's not a hard line in the sand. If I wanted a hard line in the sand, there are some, like I would pick the last bounce, which is 265. This one is even harder, 256 and change. So if you're looking for something like a hard line in the sand, maybe that would be it. This is an even harder line in the sand, an immediate rejection of this level. So I like this, 237, 238. But there's one like here. I'm not calling for this. I'm just saying in a disaster, these would be lines I would look for. Each one of these lines that was kind of a struggle on the way up will be some support on the way down. Now, this is the point of control. That's the problem in Apple. What? Yes. In the last year, this was the point that got bought and sold the most. And it's this line right here, the consolidation line. Somewhere in this earnings report and thereafter, they decided, holy crap, Apple is so underpriced, let's run it up. And then it went from $200 to 120 points higher. So if the you-know-what hits the fan, people start dying in the U.S., this would be a hard floor, in my opinion, where it's actually as strong as that other thing we were looking at, the point of control and the SPY. So that's the one problem with the Apple froth. I'm going to switch to a collection, FANG, right? Facebook, Amazon, Netflix, and the two Google tickers. This is FANG, same period of time, falling into its consolidation level a lot closer to its point of control. So this is the volume part that got bought and sold the most. And look, it's pivotal. It's not a coincidence. If you can draw a line, you can say, okay, they tried to fight over it and they finally broke out, like an inverse head and shoulders right here. And then they overtook this, and this was a huge failure here in back April. Oh my gosh. Okay, so this is where we just sliced through right now. So they're fighting over it right now. Very pivotal. So let me see. Do I have a line on it? Look at that. This top right here. I'm going to draw a line to it. Something simple. So I'm going to go like this. Just a visual reminder that where we're at. It's probably not straight, but anyway. So you can see this line was rejected. So this is a collection of stocks. So clearly you can't just trade FANG. There's a ticker called FANG. Don't confuse that. So if I'm long FANG, so to speak, I would not be panicking out of the zone if it's an investment. If it was a trade, then I should have been stopped out a long time ago. Every pivot becomes some sort of support. So the point of this video is to try to eliminate the noise. The headlines are noise. We don't know. All I know is that we have a problem. It's getting worse, and companies are panicking. The Wall Street is panicking, pricing out premium out of the companies. We must have priced out $2 trillion, $2.5 trillion in market cap. How much more is the virus going to do in damage? Wall Street prices out immediately everything and then starts to build it back in once we get the data. So if it turns out that this virus is not going to kill everybody, they start pricing it back in. But unfortunately, the governments created the problem that is actually a problem and not a headline problem. The headlines caused shutdowns everywhere. They're shutting down schools. They may cancel the Olympics. So we still have problems, and there's actual tangible P&L impacts. The governments are going to regret doing this, and they're going to throw a whole bunch of money at it, and they're going to pay for the mistake. Unless they know something and it's not a mistake. So maybe it's like an Ebola, I don't know. So I'm going to ignore the headlines. I'm going to ignore the fundamentals and see if the charts provide. So the chart is telling me, hey, as an advisor, you might be falling into a zone that is actually a safety net, a cushion, a rubber band, a mattress, whatever you want to, I've heard it called a mattress. Rubber band probably describes it the best. Boing, slows down as it slices through this. So these guys are about half of this, the NASDAQ. I'm going to add Apple in here. So this is Apple. I hear Microsoft got hit hard today. So this is FANG, Apple, and Microsoft. So a giant chunk of the NASDAQ. So how much froth is left? That's up to the individual. Now I'm going to show you a picture. This is the weekly candles. S&P, you can see how it just erased a whole bunch of it. These are weeks. 1 week, and it's not over yet. All this effort gone. This is the Qs, the QQQ. You can't see it here. That's the small caps. The Dow. Financials. I was short a little bit. I wanted to short Goldman Sachs. I just didn't have the guts. The industrials. And then you have the VIX, VXX, back to the ledge-ish. So it should start seeing some resistance. But bonds, breakout. This is FANG. Banks, okay. So we saw everything. This is just a week for perspective. Clearly, a lot of premium is gone. Clearly. So the easy short is done. Now tomorrow, Friday, is probably going to be a scary day just because we don't know. And probably CNBC is going to start changing its tune. They kind of caused this, triggered it. They started covering. They had Buffett coming. And the week before that, they started pumping the messages from Cramer and such. Oh, we're short, we're going to be selling, and blah, blah, blah. And now they're starting to pepper in, oh, we're going to be buying, and every guest you can see, they ask the questions, they want them to say, but we're kind of close to a bottom, right? I mean, it must be close to a bottom, right? You can hear the tone. They covered the downdraft. Everybody's watching CNBC to know what the fuck is going on. Whoops. First F word in videos. And then on the bounce, they will cover the FOMO. Hey, can't believe we fell down so fast and we're climbing so fast. Anyway, so that's my speculation. Now, there's still outstanding headlines. So there's no hard line in the sand. Nobody can tell you this is a bottom. And if you're looking for an absolute bottom, you're probably going to be looking for a long time. You could hit one or two by mistake, but that's more luck than skill. Some people claim it. I've been lucky a few times, but I can't claim I can do it every time. I can tell you if I wanted to draw a line in the sand, it would be right here. What is this? What are we looking at? Okay, so that's a collection of stocks. I can't do it. But this would be it. Look at this. A nice point in time that should mean something. Anyway, down below in the description, there's a link to the chat room. We did great work today in the IWM. We had some pretty winning trades. Believe it or not, we caught this whole thing twice. This and then a reload. So, and then once we're done, somebody said, okay, what's next? I was like, wait, you just had a good day, right? Okay, then go walk the dog. We're done. You don't need it. So here's proof that levels matter. Look, the bounce was hard, and where did it fail? At the prior level. So this was classic. And look, if this fails tomorrow, there's going to be a second leg lower. This is what are we looking at? IWM. So IWM could be headed lower tomorrow if we lose this. So what is this white line? I wonder. I'll zoom out. 146, 145 doable. So this is IWM, 145, 146. Okay, so this is where it would be. Ta-da! So this would be the whole October rally gone by tomorrow if we get there. The whole thing. I'm going to reset it. There we go. So that's the October rally. It was a base for the other rally. It was a base here. Look, I drew what would happen if we lose it. So if tomorrow we fall to it and then we lose it, then 135, 136 is doable. Not to be gloom and doom, I'm being honest. I said I'm going to look at charts, and I'm showing the charts. So this is an important candle right here, in my opinion. So 147.5 is important, as was 152-ish, in my opinion. So this was an emphatic bottom for the October rally. This was an emphatic bottom for this rally. Well, it was a good hold. They held the gold line. This was an emphatic bottom because it was one tick. The day opened, they tried to take it to the dumps, and they said nope, and they closed green and rallied. Same deal here. Here they took a few days to do it. What will they do? I think there'll be a hard stand here, 147 and change. We might be there after hours. I don't know. I shouldn't say that. And also there should be a good fight at 144.9 and 145 for good round numbers. Okay, after hours is like 147, the last tick, 146.98. So this is how I promise myself to be honest. I don't know the headlines. I ignore it. I know the fundamentals. They're a non-issue at this point. So the charts are the only real true thing right now, and use it to make your own opinions. All right, Nick signing out.